Your feed is fake, you missed the move on that breakout play. While you were scrolling, I was live, dropping levels with the Rip Crew vibe. Your guru's gone, he sold too soon. We nailed that flag on the 5-minute zoom. Chart God called it, Fitwit's late. We post our trades, no need to fake. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and your chat's a ghost. Try to flex but we cook the most. Bears cry foul while the bulls just coast. Stocktwits wins, let's raise a toast. Whoa. We shorted the hype, you read our blog, we read the tape right. Volume surge, we saw it first. Posted that setup before it burst. We ride the rip, we fade the fake. We meme the market till the close bell shakes. Tag your tickers, shoot your shot. This ain't a cult, it's just too hot. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and the algos froze. We're the edge while your strategy blows. Your DMs dry, our alerts explode. Stocktwits wins, just thought you'd know. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows this ain't for show. We move fast while the boomers grow. Forget your forums, forget your posts. Stocktwits wins, coast to coast. Oh, oh, oh. Yeah! Stocktwits knows. You just caught
Wow. Wow, here we are again, another week of the Community Rip Live right here on Stocktwits. It's 2 p.m. on Wednesday. We have a special guest. You guys might know him, seen him around, posting on Stocktwits a little bit. Hi, Howard. How are you?
What is going on? What it says rolling out the red. Of course, I have technical errors. Can you see me? I can't see anybody.
Yeah, I can see you, Howard.
We can see you.
Produce. It just says rolling out the red carpet on my screen, boys. That kind of sucks. Should I relog back in? Sorry, guys.
Yeah, we're good.
All right. I just can't see the charts. Howard is good. Big. It's good to be here with you boys.
Well, it's a pleasure for us to have you, Howard. Well, first, just thanks for having us on the platform. We're really enjoying doing the show. We've been doing this for a while, but we love doing it on Stocktwits because that's where the three of us met. And that's what this show's all about. It's the community rip. So we want to bring in as much of our village into this place as we possibly can.
Well, listen, we are a dating site for dudes.
Is that your new tag?
I tell you what, it might work. We're like a he, she, them dudes. There's 4 categories.
Whatever works, man. The more people we get out here, is the better.
And it plays right into your degenerate economy, right? We can you can make some money, you could lose some money, and date some other hot dudes.
Identity doesn't matter in the degenerate economy.
Awesome.
But all right, you guys are doing a great job. It's so hard to do content, so it's fun that you guys are doing it. You do it kind of just to make yourself a better. What have you noticed? I mean, I do it just to do my homework. What do you guys notice since you started doing the show? Like, what's kind of the goal for you guys?
For me, it's always about trend direction, right? And figuring out where we're going, where we're heading to, what's potential zones that could be trouble for us. We're both more technical than we are, or technical in trade more than macro and fundamentals. So looking for, I was taught a long time ago, it doesn't matter how cheap your stock is. If they don't like it and they're selling it, it doesn't matter. So just making sure that we consolidate our thoughts week in and week out, which is the midpoint of the week is a great way to get to consolidate looking forward for me.
Well, I like showing people what I've learned, and I like learning things from other people. And I mean, I've said it numerous times. Nick JFDI, who's not here with us today. He's on vacation. Hey, Nick. And GP, like they're completely different traders than me. And I've learned so much just absorbing the knowledge they have. And there's countless traders on Stocktwits that, you know, you can learn good and bad from. And I think that's invaluable. And I just try to pay it forward with what has worked for me.
I love it. Well, what are you guys seeing right now? What do you want to talk about today?
Well, we always start the episode with a look at the markets and the cues. And right now we're having a bang up type of day. So let me pull up the chart real quick. Hey, Howard, quick question. I was wondering, I know you follow a lot of trends, but do you even look at technicals? Do you care what a chart says? Does it mean anything to you?
I think it's the first thing I look at, obviously, because Stocktwits, for me, I built it for myself, right? So in building something for myself, because that's what you should, I think all the greatest founders have an itch to scratch. So if you really look at Stocktwits from like day one, it was an inspiration from the, you know, we went from 20 minutes Yahoo Finance when I was starting out, delayed as a retail, to 0 with Twitter. So obviously that jump got me, as much as everybody was making fun of Twitter, including myself, when I realized, you know, you're going from 20 minutes to 0 and you applied it just to the financial vertical, we had like a, you know, was 0, like an exponential growth or an exponential change in like building a business in the financial market. So for that, so Stocktwits was built for the speed of Web 2 and light cloud-based sharing. And, you know, who did that attract? Technical traders. So I think at heart, I'm 100% technical, but like as soon as you say technical, people don't take you seriously. So why even, again, I'm not here to like tell people what to do. So if like, you can't force people, you know, when you're telling stories, and the same thing comes with like understanding how stocks work and how CEOs think about their companies, or the great CEOs. They're, you know, numbers are definitely a majority of the story, but storytelling, as we've seen with Palantir or other kind of meme high multiple stocks, even though they're growing fast, is storytelling matters. And even more so in an AI world where fundamental research, like even if we weren't technical, all of us, in a world where fundamental research is 0, like you can do chat GPT prompt that analysts share, type it in all day, and you can run reports on the deep research reports on the S&P 500 stocks, you know, per hour. And so what is the value of research when everybody has it for free, right? Analyzing the financial statements. And the only edge you're going to have is pattern recognition, call it technical analysis, whatever you're going to call it, and then money management. And that's the case. And by the way, the data shows the average person is spending like 6 minutes before they make a decision. That sounds high, but but in the end, it's down from like 20 minutes 20 years ago. So where's that going to in a world of prediction markets, right? In apps, it's going to 0. So if the decision-making time is going down towards 0, why would you rely on fundamental information that is assumed that everybody has for free? So we're headed this way, and I think the people that like do pattern recognition, or whatever they're going to call it, or understand relative strength, relative value, and can apply context, taking all the word technical out of everything. It's those who can understand, you know, how to look at multiple patterns at the same time, and pattern recognition. You know, same thing with art. People that are the best at hanging art on their gallery wall and picking artists, you know, did better than other people. So it still comes down to technical analysis, but like as soon as you say that, the glaze goes over their eye.
I think with charts, especially someone who's new into trying to be technical, they can be overwhelmed, whether it's drawing lines or, you know, seeing volume. I think we try to dispel the myth that it's so super complicated. I mean, you can make it more complicated as the human condition is, right? But I think for us, you know, and I speak for GP and Nick on this, I think finding a simple plan that you can make repeatable patterns out of, that's where you find success. GP, would you agree with that?
Yeah, so if you're trying to buy, like if you're catching a knife or a falling bottom on a stock, right? Right now, the hot names are UNH, Novo Nordisk. But I think in that bucket is Nike, Starbucks, Lululemon. The list goes on, right? You got to have a plan if you're going to enter these things. Going 100% of your cash into UNH or Novo Nordisk, it's not smart, right? Like the bottom can be anywhere. I think everyone's trying to find it, but you gotta wait for it. So have levels, right? So if you want to buy at 250, fine, but also have money left over to buy at 220 and 180. And what if it goes below 180? Do you have money to buy if it gets to 120 or 50, right? So just have a plan in place is one of those things.
It's great. I'd like to see you go do a minute on that ball in a squat. Let's go see you do a little abs on that ball here while I talk.
You want me to do? No, that's not going to happen.
Let's do it. Let's do a set. Let's do a set. No. I got 30 seconds. I'll do a minute. I can now plank. I can plank on one of those things for a minute. So why can't you? So listen, every time you try and buy a dip, you should do a minute plank. The people would get this very well. I think there's two things, right? If we're going to chat about this for people on Stocktwits, right? So hard. So let's eliminate some things you don't do. Is like, okay, the richest best traders in the world, they don't short stocks. Okay. The second best thing they do, and let's take Warren Buffett out of this because he's just a little different, but I think it still matters, is like they're not buying dips. They're not trying to catch bottoms. Right. So, and the third thing is they're probably not focused on cyclical stocks. You can do it, but like if you're an investor and you're just not focused on growth, you're just making the game harder, right? Because the way most of the world works in an index world is momentum. How do I get into the S&P 500? And if that's a game people are playing and you're trying to play a different game, I mean, so in a world where like indexes rule, and until they don't, the indexes rule. You want to be long or long direction. You don't want to buy falling knives. Everybody does it. Don't kill yourself and beat yourself up too much, but you'll learn. And the third thing is stay in the market, right? Like now, your tolerance may be I'm conservative and I like to have 30% cash, but then then 70% of your money, depending on has to be indexed or direct index. The way I do it as I got older was same thing. Okay, I'm a bit of a nervous Nelly, so if I'm going to be 40 to 70% in the market, that's my number always. Then I'm going to try and be as tax efficient as possible, so I direct index, QQQ, SMH, SPY. And the third thing is when I recognize that we're in a bull market or whatever, a positive trend that's rich with breakouts, I don't necessarily use leverage, but I'm definitely looking to supplement my long position with swing trades and investments that I allow myself to become trades, not trades that become investments. So those are like the very highest level 50 years of doing this that work, right? And they would have worked if I had started this from 50 years ago, and they work today. I can't guarantee they work in the future because people in this degenerate economy might decide to pull all their money out of index because they think they can beat the index. I just don't think that's going to happen, and we're a long way from that. But as the data shows, as from Citadel's, over 20% of the world is now retail investors of the volume. So there is a possibility at some point in the future that the markets change structurally where people just are trading more than they're staying invested. But you can't fight the biggest of all trends, right? And the easiest way to get upside down is like fighting the biggest of all trends, right? And then the second thing is avoid people that talk macro, right? It's exciting, it's sexy, it's interest rates, it's gold, it's foreign exchange. I mean, you are absolutely setting yourself up for the most clusterfuck of conversations and confusion. So keep it simple. It's like U.S. markets, and positive expectancy and trend following and being in the market. And boy, I mean, and if you can't do those things, like index is fine. Just pick your number and index. And by the way, if you see 2-3 red months in a row, double your monthly exposure to the market. And if you see 6 green months in a row, maybe sell a little bit. You don't have to if you're thinking long term, but like you start getting used to green red, and you just start developing the simplest form of technicals, which is just how much I didn't know it could be read for this long. And then you train yourself when it's read for that long to be a buyer versus a seller, and vice versa. So right now we're just in one of these markets. So getting back to QQs, we're just in one of these markets that, like, the more you think, the worse you do.
Hey, Howard, one thing that Nick brings up, especially when we're riding a trend, or he likes riding momentum, right, is wanting to squeeze that last drop of blood out of the turnip, so to speak. How do you decide when a trend is coming close to an end? Or do you wait till all of a sudden see it starting to fall off? Do you buy on the way up, or do you sell as it starts going down?
You know, that's really what makes good investors the difference. And I would say I'm a good investor because it's been a bull market most of my life. I'm not a great investor. I think I'm a better investor the more locked in I am, meaning I became a better investor and my returns improved when I started doing seed stage investing, because I was forced to be in the market. You couldn't sell, right? Now, you got things that go to zero all the time in my business, but like you can't make your money on Robinhood, you know, if you invest the first day, unless you wait 8 or 9 years. Now, the roller coaster along the way was brutal, right? The amount of times, so the amount of times I wouldn't have ridden it from 10 million to 20 billion was probably 100. Versus, look what happened. You pick a great company with a great product, you let it bake, get a little luck, you have a bull market, blah, 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 good macro, yada, yada, yada. A lot of tailwinds, of course. Like I was born on third base, as everybody was that can invest in the US stock market. But how would I have done that if I just know it wouldn't have, I know I couldn't have held it if it was a public stock, right? So being honest with yourself and going, you know, that helped me become a better investor just by committing most of my capital to seed stage investing, right? My risk capital. As I get older and go more to the public markets, where I couldn't have held Robinhood myself with so much exposure to it once it went public, the easiest thing to do is index, right? Meaning you're going to own the top momentum stocks. It's kind of rigged, but it's rigged in your favor for now. And I think it's much harder to own a stock and hold it through squeeze I don't even know what that means in squeeze the final juice, because 80% of stocks go to zero, 90, but we could argue with 70 to 90% go to zero. So squeezing sounds like a dumb idea. I think what matters is your risk and reward tolerance, right? And seeing you only need one or two great ideas in your lifetime, like for me it was Robinhood and maybe eToro and Stocktwits, seeing that you only need one or two in your lifetime, and seeing that Warren Buffett made 90% of his money after he turned, like, I don't know, 50 or 60. What's the rush, right? Like, you're going to make so many mistakes. So the idea is, yeah, who knows? And you could. So I'm for paying taxes. I do think long term over short term is smart, but I'm for like not thinking about squeezing. I'm just thinking for like letting stuff run as long as you can at a comfort level that you can. And I think it's much easier to hold on if you truly understand the catalysts and the fundamentals and the total, what the product is. Are you using the product? Do you really understand the competition? You know what I mean? Do you really understand the management? Is it a founder-led business? I mean, there's so many variables. So if you're just purely technical, I think it's much easier to squeeze. But if you're a human being that's like just a normal human being, it's very hard to squeeze. So I think it's just so different. It's like hogging the conversation. You can just cut me off at any time. But it's like you go to sleep and you have a sleep score. It's ridiculous. I don't know. I'm a 1, you're a 2. Like, what the hell's the difference? I got a whoop. I got a whoosh. I got shit all over my body measuring. And I know if I eat sugar at 10 o'clock, my score's shit. Like how, like, what the fuck are people doing? And yet your whole life is about, compounding, and no one knows anything about the stock market. No one has a risk score for what. So when someone says they're squeezing the last profits out of something, I'm like, what the hell's this guy's risk score could be a 2 and you're a 98. Right. So you saying squeeze, and that's the biggest problem in the market, is like you're all smart. These shows are great. It's fun for us to do for ourselves, and some people get stuff out of it. But we're learning how to like. Each of us have a different risk score, right? And it's like no two risk scores are alike. So it's like it's 1 to 100, but it's like infantile differences between 1 and 2, let alone 1 and 8. Right.
And the time frame, right? My time frame's completely different than yours, not just the risk.
Yeah.
So it's really, in my mind, two variables, right? How risky do I want to be versus when do I plan on needing to exit out of this? I think it's two different things.
Yeah. Anyways, so it seems like no matter how much we talk, Pace is doing a plank. So the question is, what is that even real? Is that even a real background?
Yeah, that's real.
It's real, but it feels like it's never been used. Based on this conversation, it's never been used.
That is probably accurate. But so like the whole risk score, right? The risk score conversation always is intriguing because for me, like even with people who have different risk scores, I don't think they have time frames when it comes to that conversation. Their risk score might be different for different time frames as well.
Yeah.
And the type of stocks that they have. And so it's really hard to convince someone who's just trying. We're having this conversation, I think, a couple of years ago when inflation was at like 9%. One of my friends got out of a private equity deal, and he's like, "What should I do with my money?" And I told him to buy Qs. He's like, "No, I'm not going to do it. I don't want to lose money. I'm just going to put it in treasuries." And I'm like, "Inflation is 9%. You're getting 5% in treasuries or 6% in treasuries. You're losing money. You're locked in losing money for the next however long you have these." And then he ultimately went with doing like a managed fund, right? Which with the fees and stuff ultimately destroy you over time.
I think if there was, and we've been close to this with Riskalyze, a company that I'm not sure they've been bought and sold in private equity, but you know, when you go to ski, there's like beginner, you try on boots and whatever, and they go beginner, intermediate, expert. I'm like, oh my God, that's they're not even trying, right? Like, what the hell does that even mean? And then compound that with like stocks and risks. It's like, if people took a standard score about risk, how do you feel if your portfolio, if there was a standard risk score as a starting base? And I knew you were at a fucking 80, and Holdingbags obviously is a 99, and I'm a 40, right? At least we would have some context when we came to the stream, who I'm talking to. I don't need to know what your face is. I don't need to know where you're from or what language you speak. I think, I'm working on that as like my biggest. It's hard because you got to develop an API that people would use and take you know what I mean? It's just like, and are people going to be honest with the test score? But assuming people are just going to take the test, right, and truly understand their DNA of risk, and it's shaped across many ideas. But like, we all know our risk score because we know it. We're just not sharing it because it's too much to share on every trade. But if I know you're a 60, and I look at an idea you share, it's going to give me more context that I know you're thinking about it as a short term. So I think you have to start there. Then obviously Stocktwits will eventually be able to separate ideas by like who the person is, by their risk score, and then time frame. And then, the last thing is, because in the dream world, is people would just stop trolling each other, right? I think it's funny and never going to stop it completely, but like, I see people still doing it. I'm like, what is the point? Like, what is the point? This guy's here sharing an idea. It's just bite your tongue in your keyboard and stop. So it's like social will never be perfect because of that. And kudos to the people like you that share ideas but it's the way we curate. It's falling by the wayside. Like, people are tired of, if you let them spam, they'll spam.
Yep.
But if you continually battle them and set kind of standards in your community, it's never perfect, but like, those are the things that matter to me. Is like, if people are willing to share, let them share. Good, bad, moosh, like in Vegas. Like, they make money off the moosh, but they treat them just as well as the high roller that wins. And we have to help people share their risk score, hide their identity beyond knowing their risk score, and let them share and give them the tools to journal and become better investors. Because like, in the end, no matter what kind of strategy you are, if everybody journals, they just become a better investor, right? Even if no one's following you, just writing it down will make you a better investor, which you guys do, which is why I trust, listening to people that share, right? Because they're on the path to trying to be a better investor.
Well, thank you for that, Howard. I think that's really our ethos, so to speak, is we just want to show people what's worked for us. And if you can take that and use it, great. One thing that GP has used a lot, and I heard you mention it, was a founder-led company. And he really likes getting into those names.
And disruptor. Those are the two, right? So founder-led and disruptor of markets. For some reason, not some reason, they're there to change things, make things better. So they ultimately figure it out in the end. It may be a hell of a roller coaster because your Robinhood, it's gone up and down. I finally watched the movie Dumb Money while I was in New Zealand a couple of weeks ago.
It was so bad, right?
I don't personally like Seth Rogen, so it already kills the mood for me. But that whole movie was a great concept into what Stocktwits is and the power of community, and it was really nice to see. But ultimately, everyone overstayed their welcome with it, because what I've learned is that people who are on that side of the marketplace, right, the big investors, the institutional, they'll make the mistake maybe once or maybe twice, but they're not going to let you continue making that mistake over time. So they'll squeeze out. I think in that one was Melvin Capital. They'll squeeze out one or two players, but they won't let everyone fail. So it's that community, that essence of that movie was really cool, which is let's band together and show that the information that we're sharing can be powerful, right? Ultimately, everyone gets caught by the greed bug, but the power of community was really apparent in that movie. So it was nice.
Awesome.
A terrible movie, ultimately.
Terrible. Like the way that it's just like I looked at Time magazine and I just see photos they take. They're just so out of context. And the whole movie was out of context. Sure, there was it was a joke of an era, but that wasn't why, right? It was a behavioral thing. And the whole, it was just so many things at play. And it was just such a lampoon of off topic. It's too bad. It was such an interesting era, but the whole era has not been covered well.
Yeah, absolutely.
Howard, I think, as many ideas as we've shared on the platform, I find that we do a lot of self-congratulatory posts on our winners, but I'm interested about sometimes what we do when we lose, or some of our bigger mistakes that either any of us have made. I'm curious if there's one that maybe you've made that's really stuck with you.
Well, I think it's just like today, or literally
just in your investing
day.
journey, just in investing.
I'm saying like literally it's every day. So I think the biggest mistake is not staying invested, or is just overall looking at that long-term trend of the S&P or the QQQ or now the SMH is like, what the fuck was I thinking? In a positive expectancy world, compounding is art. The numbers could be fake. Trump can make up numbers. You and I can make numbers up. The Fed can make numbers up. The CEO. You got Excel. Everything's fake. Assume that if you can change one number and change the whole model in Excel, and you think numbers are real, you're the idiot in the room. Now Trump will say it out loud and go, "Oh, the numbers don't mean anything." It's really maddening because he's the one that's telling you the truth amidst a million lies. But if the numbers are fake, then you should, and yet there's still positive expectancy. What a fool for not playing the positive expectancy game, right? Where until they change the rules where earnings don't matter. The true overriding rule of the market is earnings-based analysis over time. Then yes, staying invested is the number one thing. Am I mad that I didn't hold Apple? I mean, theoretically, every time I sold Apple, I should have bought Apple. So how good an investor am I? And so, those are the two big ones. I don't know if you can get bigger than not being invested the whole time in an index. And then the second one is selling something where I was trying to be smart and it was the dumbest thing to do. So in that world, I think just that kind of honesty is like, what the hell? Could I tell you one that like so many keep me up at night, but in the end, it's not like my kids. It's not like I'm missing anything, right? If I see the life of a billionaire right now, I'm like, ugh, doesn't seem like if I'd squeeze the last penny out of every trade, my life would be better.
Right.
So I think the most maddening thing is when you let a loss become a bigger loss, and we've all done it. So the key is if you're gonna make the mistakes, avoid the biggest mistakes, which is, like I said, shorting the market. And the second thing is letting one bad stock kind of take over your portfolio returns. It's just, you have to learn at some level to take that loss.
Yeah, I say it over and over and over again, is it's okay to be wrong. We're all wrong. What's not okay is to consistently stay wrong, right? Like you have to evolve from that. And I think one of the real challenges that we talk about on this show all the time is selling truly is the hardest part. Whether you're
anybody
selling,
can buy a stock. It's like that TV show. Oh, you know what? Take the reservation. You just don't know how to hold the reservation. The old Seinfeld line.
whether you're selling at a great gain, right, or you're selling at the absolute bottom that you've absolutely gotten destroyed on, you got emotions that don't want you to sell for whatever reason, right? Oh, the stock will bounce back. I'm going to make another 10%, right? You've got all this going on in your mind, and selling truly is the hardest part of this game.
Yeah.
Short-term memory too. Like you gotta be like, take the loss and don't let it compound you from getting back in if things change, right? Like it's a lot of people will be like, they'll get into a stock, finally sell, and then when it's starting to break back out or start to go, they're like, oh, I don't want to be invested in that. There's too much emotional damage. Put that shit to the side, right? Like I think a lot of people get too in their feelings about stuff when it comes to the markets versus just being very pragmatic. And being pragmatic will probably, and it's impossible because we're all humans, but being pragmatic will probably get you better returns as well.
Yeah, I mean, what's the new thing, right? Longevity. Everybody's reading this book. Like I'm talking planks and farmers carries and all the stuff that before the show that we were talking about. You're insane if you're not thinking about it. Doesn't mean you have to be like a nut job about it. So it's the same thing with investing. Like if you're like the fact that longevity, we're talking about longevity without talking about investing because they go hand in hand. If you're going to live, if you want to live that long, start compounding as early as you can. So it's like we still are at the early stages of all this where people are actually thinking they can live forever. No one had that thought. That's how stupid the world is right now. It's people, despite all this negativity, people are like, I could live forever if I just eat beans and 6 calories a day. Meanwhile, Hunter Biden, who's done crack his whole life, looks better than the guy who's doing that. So, but in that world where you commit to just saying this is an incredible opportunity, and then if you're going to do that, get a mentor. Like who cares? Like I'm not saying you got to pay for him or not pay for him. How much? I don't know what the right answer is, but the fact that like mentorship. And again, it doesn't have to be someone who's like Stevie Cohen or the best trader of all time. It's someone who like understands how you think and just keeps you invested. Like find tricks to help you do the opposite, right? Because your emotions are just going to crush you in this business because that's the market. You're playing a game against everybody else in the world. There's no other game where you're paying literally everybody and computers. And you're playing every single human wrapped around every computer, wrapped around AI, wrapped around 24/7. It couldn't be, so I say this all the time, it's never been easier to invest and it's never been harder to stay invested. So you have that dilemma. So if two things are true, it's never been easier to start investing. And the other thing being true is it's never been harder to stay invested, then find yourself, first of all, you got on, so you were smart, you used Robinhood, Coinbase, Kraken, whatever the hell your degenerate on-ramp is. Now get ready. I'm telling you the one truth next. Never going to be harder to stay invested. You're going to have signal from coming out of your ass in every angle of the world. And so figure out like a peloton of people that help you stay invested, like group therapy. And honestly, there's not much more you can do about that. And you guys have found that your ways of doing that. And then obviously manage your time. Some people, they just want to do it 10 minutes a day. Some people, they want to do it 10 minutes a month. And some people, can't leave the screen for 10 minutes. I mean, again, that goes to, there's something for everybody. And the market needs all three of those participants, right? We can make fun of Citadel, but we probably need more Citadels. And we can make fun of the day trader, but we need them for liquidity. We can make fun of the swing, but they're all part of like this ecosystem, which is why it's such a fascinating industry.
Howard, what is it that gets retail labeled as dumb money? From what you're saying, everyone's part of this game and everyone has to be in, but most of us, especially on Stocktwits, are retail, right? And there's some pretty profitable traders out there. Why does retail always get the rap of being dumb money?
I used to be that guy because, Kramer got me into it, like with his writings and whatever in 96, 97, 98. He was like the hero of the retail guy because he came from the institutional side of Harvard, yada, 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 street.com. And so I carried that torch with Stocktwits, and I'm like, what a dumb torch to carry. Like, who am I the Pied Piper of, right? Who cares what people think? The data is the data. I mean, you call them the individual. I've seen institutions. I have money with some institutions. I wish I can't believe how dumb they are. Have you seen SoftBank, what they get away with, or the Federal Reserve? So
we've talked about it a lot.
Yeah. So I'm saying, I think our job is to not. If you like Stocktwits, you wear it's like any brand, you wear it proudly, but we don't stand for anything. I'm just like, I made so many mistakes as a businessman trying to convince people that we're good or different. It just is. Like, I think I have friends that are institutional that are super smart, and I have friends that day trade that are super smart, right? Like, I've known Brian Shannon forever, and his VWAP literally works. Now, can you execute around that all the time and cherry pick which, when you feel like trading? Absolutely. But like, there are people out there in the most interesting lifestyles that are incredible investors. So I just think going to risk score, I think the idea of retail versus institutional is just the dumbest argument, in the sense that, just like macro, a lot of the people will talk about macro and the difference between retail and institutional for the rest of time. And
then do you think macro people are the dumbest people versus retail?
No, because
you're not following trend, right? Ultimately, so.
But it's a really good question, because one of my favorite people is Raul Paul from. I'm an investor in his company, but more importantly, I just find him super wise and hilarious about markets. But yeah, like, dude, if you start talking about the yen and
the yen carry trade,
okay, I mean, I don't know, it shows up in the QQQ is what I care about. Like,
that's what everyone cares about.
Yeah. So, but what I do think macro is important is, if it wasn't important, would Bitcoin be as popular as, right? Like, if we didn't have macro problems, would Bitcoin be at $100,000? I doubt it. So I'm saying, like, macro for sure. If there wasn't macro issues, would gold be what it's worth? But I mean, the idea of when it really matters is a tough one for me. I think ever since 2008 in the financial crisis, macros mattered again, but they tampered with it with ZERP. So the macro was hidden, right? And now that they raised rate, the macro game was back on. So I think it all still shows up in the S&P at some level. And
so there's a conversation that happens that I'm seeing a lot more of, that we're late cycle. And the bull market started in 2009, which I think it's bullshit ultimately. In 2009, there wasn't a single soul calling it a bull market. They were like, can we finally bottom? 2010, 2011, 2012. I don't think anyone thought what the markets would do, really. And so I'm curious on what you think. Do you think it's a late cycle market, or are we mid cycle? I would say mid cycle, but that's me.
We're soul cycle. No, hang on. So we're
soul plane.
See what I did there? I still love these sweatshirts.
Are they still around?
I think, by the way, guys, that logo is too big, so I thank you for wearing that. What are we, like Whataburger at Stocktwits? Like, I can't even believe this. We're making you
Whataburger's
guys
great.
wear, like, so, but hang on, it's just another great question, and it's just a trap, right? You know what late cycle is? I'm 60 years old. I'm so late cycle that I don't even drink milk anymore, right? That's late cycle, right? Where if I run out of soap and I have like sweaty Peloton stuff, or I will just do a little bit of soap. Like that's clean enough, right? Because I'm 60. Like, will I wear white knee socks? Yeah, I'm 60. So I think everything that I think about is late cycle. If you're 20, right, and you're caught up in what cycle we're in or what interest rates are, or politics as kids are now, and the woke versus non-woke, your mentorship is failing you, right? Like your algorithm has got you in a tailspin, and your mentorship is failing you because you're 20. You're as Jim O'Shaughnessy says, you're a time millionaire, right? If you're 60, you're a time thousandaire. So cycles matter a little more because you're 60. Like, do I need to invest in another venture fund that's going to be 15 years, right? Like, what am I doing? So I think as you hit 60, as I am, I'm definitely thinking about cycles. And now, and you asked me what I regret ever thinking about it before 60, because once you turn 60 and you have weights in your room, you're doing kettlebells and you're doing all the stuff we're joking about and eating more protein, most days you'll feel like you're 40 or in your 40s. But guess what? There's one day a week you'll feel 70, no matter how well you do as a 60-year-old. And so once you feel like a 70-year-old for a day a week, you're thinking about the cycle. And do you need the aggravation? But until you feel that, don't even think about just, money management.
That's fair enough.
And I think, listen, truly we're early in the cycle, right? Like AI is an exponential improvement in how to start a business so quickly. If we're really going to talk about cycles, forgetting about the macro and where the Dow is and the S&P, in terms of a technology cycle, right? When we were in the 80s and 90s and you had to start a business, which I did, and you had to call US West and you had to get 3 weeks for a phone line and fax line to be set up at your office. Like, you couldn't set up a business until you had like so much shit. Like, you probably had changed your mind by the time the phone showed up. Okay. And so it was a tougher way to start a business, right? And then you had the internet, which was like a 10x improvement, despite not being great. It was like, Windows World. It was a 10x from like landline, and then you had a crash, and then Web 2 was 10x internet, right? And so we had this massive boom. I think the exciting thing about AI is crypto is kind of a sideshow, because crypto is money. It's tech, but it's also money and greed and fear. So crypto was like a fake. It's always going to be here, but it was not a cycle. It wasn't like an early cycle thing, unless you own Bitcoin and a couple other assets. Most of them are zeros. So we hadn't had anything since like the cloud, like 2009 AWS, right? And AI is like a 10xer, meaning even if you didn't want to start a business in Web 2, you're definitely going to start a business in an AI world, right? Because you can 10x your workflow, right? And so we are so early cycle. Now, how to invest in that cycle, I'm not going to, Nvidia's been the winner, Microsoft's been the winner, select other few, again, outside indexing, but like those aren't going to be the only winners. And tens of millions of people are going to start their first business. And it's never been easier to start a business. But it goes the same thing with investing. Never been easier to invest, never been harder to stay invested. I think it's going to have the same issue. It's never been easier to start a business in an AI world, but can you get satisfaction and do those things to make yourself satisfied as a business owner? Don't know. But we're at the beginning of that cycle.
I'm assuming AI is people start copying ideas as well pretty quickly, right? Like it's going to be harder to protect your IP over time.
But that's great. But in a world, I agree. But in a world where you can, like Buco Capital, he's an analyst, and I don't care what his name is. He's smart, and he shared bunch of prompts yesterday about how he does deep research on portfolio companies. He's sharing it for you to copy the copier, meaning AI is all a scam in terms of it's a magic trick of people scraping the internet and machines doing their thing in some level, right? Stuff's getting stolen. So jobs stole ideas. We're pattern recognition guys. We stole pattern ideas that have existed forever. Comedians steal ideas. Entrepreneur, So design, advertising, it's all stolen. It's just music. It's all built on each other. But in a world where you literally can, like, stealing is magic, like meaning you can copy an analyst prompt and now run it as your own and 10x your work. And so don't get caught up in stealing, because that's just a commodity now. What isn't a commodity is your business model and your budgeting and your risk, like what you want to get out of something. So you're going to have to like kind of be more honest with yourself about like kind of your goals and stuff. What kind of company you want to build. Do you want to build some huge company that goes public, or are you happy building a cash flowing business? And people are going to have to make those type of decisions.
Howard, I know you use the platform quite a bit. One of our first interactions so long ago was on SoFi, and SoFi's been up and down. It's a winner right now. But my question to you was, you replied to me on when I tagged SoFi that time. Who right now on the platform are you finding is just a great follow that you really enjoy seeing their stuff out there?
Well, it's a good question. I would say if you go check my notification list, you can just see who I like, right? Because notifications are your true. I don't use notifications in like Twitter and Gmail. I don't have any notification, but the Stocktwits I did because I built it. Meaning I want to know what the market's doing without seeing it zing every 3 seconds, right? So again, I generally am an indexer and I swing trade. So Ivan off. I've been friends with forever, right? I do my Momentum Monday show with. So I generally lean towards swing traders because I want ideas from people that are looking at the market the way I would look at the market if I had free time. So it's just, number one, means nothing to the 99% of people, but like I'm looking at for what I like to see. And if I see Ivan very active, I mean, there's lots of swing traders, you guys, like there's hundreds. Like the CMT guys are great. Anybody who has a CMT, I'm kind of a sucker for. There's a chartered market technician. They just look at the world differently than a CFA. I think so the prompt makes the CFA dead. And he's Danny, Jesse, Spider, like it's like my son, right? He's so smart. And every time he would come over to my house for 20 years, I'm like, well, dude, you should get another degree. You can never, it takes too long for you to explain something to me. And it was always like, so well thought out, and I'm like, no, a machine can do this. And now AI exists so the CFA is completely a stupid degree, and it was the hardest to get, right? Whereas the CMT is completely mocked, but it's like the easiest to get because anybody can get it, but that doesn't mean anybody is getting it. So I'm more inclined to follow technical people. Let's call them chartered, whatever you want to call them, because I'm looking for signal. And I ain't going to get signal from reading a deep research report, in my opinion. But it sure does make some people feel really good about themselves to read and read and read. My problem with reading and reading and reading is then I'm a sucker for when the story changes and not knowing what part of the story has really changed versus having a simple reason to own it and a simple thesis. And then if the story changes, it's easy. So I'm a sucker for him. I'm excited, obviously even Stocktwits itself is offering so many more signals like that we're creating, but obviously GPAISA, I'm following ATM charts, rotation report, like the all-star charts guys, obviously they're all Straza and Riley who worked with me forever is doing drone stuff. So it's just changing all the time. So
nice.
Yeah.
Are you still following Duzio?
Yeah, I mean, he's a piece of work.
He's in our chat right now, so he's asking. So I think we got about 10 minutes. So we're going to ask some. You want to go through some of the charts or questions in
Sure.
the chat? I think there was a question about Netflix for me, but I think I've long talked about how Netflix is the market leader, and I think it was July 3rd, about a month ago, is when it started showing weakness, right? And so the question to a lot of people is, if Netflix is breaking down, what's going on with the markets? And to me, Netflix is not breaking down. It literally went from 200 to, what was it, 1,300 in 2 years, 3 years. I think it's just consolidating. So, and it started consolidating back in July, which you should have been cautious about the markets at that point anyway. Yes, markets continued to rip, but a lot of things weren't moving with it. So the indices were moving, but not a lot of things. Look at Apple, man. Apple has been stuck between 201 and 215 for the better part of since the tariff shit show began back in March, April. Ever since that gap down, it's sitting in this monster island. But it's like, it's like Wilson. There's only 2 people in that island right now, so waiting for more people to get along. But I don't see anything concerned with Netflix. Do you, Ben?
No, I was going to ask you, GP. You sold out some of your Netflix earlier this year. Is this a range that you're considering adding some more back to, or you're just going to stay with what you've got on your portfolio?
No, so I have Netflix from, I don't know, like a decade ago, and then when you got an opportunity to buy it at the lows in, what was it, 2022, which is a decade old, it was almost a no-brainer to me at that point. So those are the shares I pulled out of, the more short-term ones, but the original long ones, they're just sitting there. It's a sticky business. It was founder-led until a couple of years ago. They were a market disruptor. It meets all the qualifications until Netflix gets disrupted by another market disruptor, and then we'll have that conversation around Netflix. But nothing's changed in my model of Netflix, right? Outside of the price. So
I think, and this is why I index, right? Like I love Netflix. I've owned it, but like I don't own it right now, but I own it through the index, meaning like I'm just not good enough. Like if we look at those red bars in 22, and that's where Ackman, Mr. Tweet, was selling, right?
Yep.
Okay. Like it's fun to make fun of him, but like, how could he have sold if he really understood the business? This is why deep research and all this stuff is just like a commodity. If he was really as smart as he thought,
he's not. But
yeah. Of course not. No one is. But what I'm saying is, this is what makes picking stocks so hard. If he had simple sell rules, he was trying to Novartis this thing, right? And like buying the dip, on the way down to barfing it out, right? Which is, he just made the classic retail or beginner mistake, whatever you want to call it, by like buying the dip, not thinking he understood the story. Dude, he sold the stock as AI was coming out, right? And what is the story of Netflix other than long tail AI, right? Like if people are paying attention. What are the stocks that have led this, the AI revolution? It's going to spread out. Is AI, right? Nvidia at the top, but the people that is YouTube's Meta, TikTok, Netflix, and Spotify. Why? Because they have all the attention, and if they have an algorithm where like you're getting a subscription, you don't have to ship them anything. The reason Amazon struggles in this era is because they still have to do all the shit part of the job. All Netflix, and unfortunately, as a Netflix shareholder through QQQ, I really can't stand them right now, right? Because they're not incentivized to put out good content, right? Because they only have to put out good enough content for you to keep paying $9, right? So it's so I'm saying, like, left to my own devices in a stock portfolio, I wouldn't own it right now, because I don't think it's not about founder led or not. They're thinking like a cash cow versus a disruptor, right? Ads and bad content, like Happy Gilmore. Genius idea, but terrible product, because they can get away with a terrible product because like 10 million kids will sign up for a month, and then they'll focus on retaining them. So they're doing tricks. So anyways, but yeah, in terms of like AI helping a company, it's them and YouTube and TikTok and Meta and Spotify.
Yeah,
So
cuts their cost like crazy, right? What's that?
you brought up Apple, and we've had a lot of conversation about the Magnificent Seven, whatever acronym you want to give them. They basically take turns leading, and right now is a period where Apple is not leading. But Howard, listening to you, it doesn't seem like maybe Apple has anything to keep the attention, or they're selling the devices, obviously.
Yeah,
But
I mean,
they're not.
this is an on-ramp to the degenerate. I think Meta with glasses is pretty interesting, right? I don't know how big it can be, right? Glasses, but it's big. But until glasses isn't going to fully disrupt this, right? And so it's hard for me. I've been tempted to sell down Apple. I've been wrong the last few years, but it's hard for me because compute will go to the edge on the device. Like if I'm to believe half of what I read, and I don't understand most of it, is this will all be processed here in the cloud. So it's like, do I need the data center? Like, I mean, who's making the mistake, the data centers or Apple? And I think the market hasn't decided. It's like Google's underperformed because everybody's got OpenAI, but Google's the most profitable company in the world and being punished for it right now. So I'm saying, like, law of large numbers makes owning the Magnificent Seven hard, which is why I index. I think if you're going to outperform, you're going to have to pick one or two of those plus 10 other stocks. You can't just go Mag 7. So I'm saying, like, I don't know. I'm like tempted to sell Apple, but luckily today kissed the ring and the stock's up. He's doing deals with Trump. Like he's doing everything he can to keep the thing alive and like with a pulse until technology hopefully does its thing. I love my iPhone, right? I can see myself having a flip phone, but I love it. So it's like I'm not rushing to switch to Android. I'm definitely not going Ray-Bans yet. So it's like if I'm still looking at this 20 hours a day, I'm not selling the stock unless they're really screwing it up.
Yeah, I've been out of Apple for a little while and just recently got back in. I think this is one of the moments where Apple starts leading again, and that doesn't mean that that's a long-term forever hold. This is a trade for me, but at the same time, it just seems like coming back to cycles. It's time for Apple to take some charge, and maybe the deals or whatever's going on right now with the price actions part of that. GP, this is more for you though.
If everybody kisses the ring, you got to kiss the ring. If you're in Mag 7 and you haven't kissed the ring, you kind of like owe it to your shareholders to kiss the ring, which is why this is why people hate Trump, right? Like I'm like, it's a game, and he's making everybody bend the knee, but like I can't blame Tim Cook at this point for not kissing the ring if I'm a shareholder.
Right.
So it's that authoritarian thing that bugs me. It's just because you can make people do it. Should you make people do it? That's my beef. But in terms of Apple doing it, hey man, I don't know. Like you gotta fucking do it. Like Nvidia's CEO, what's his name, has been in there kissing ring and bootlicking and on his knees for a while now.
Oh, right? What about Elon?
Elon got too close to the testicles there. He got a little too close. You can't fly that close to the testicles.
But hey, GP, real quick on
he was Apple. Choking on the testes, as they say, wasn't he? There's some poison in there.
Once again, it's a disruptor. It does well, and he typically marches to his own tune. So
yeah,
he'll make an enemy of anyone and everyone.
He has his own Stocktwits, right? As long as he delivers good product, it's very hard to like. I wouldn't bet against him. I'm just saying he's fighting a lot of it's like the Germans in the World War II. He's fighting battles on a lot of fronts, and I'd rather not own a conglomerate. In the world that I want to invest in, like with lightweight growth, conglomerates are heavy. Right, that's Apple's problem too, right? Like, you got to get your story straight. Google's got YouTube Mail. Like if I'm a true Google shareholder, I want to spin this out. I want to spin shit out. So I think Elon's got that conglomerate thing going on.
So then the question is why? Because these FANG names kind of rotate through each other. Why even bother with an index and not just do the ETF that holds these nearly $1 trillion companies? Like I think it's called MAGs. Why bother?
Yeah, I mean, my buddies at who does that ETF? I'm embarrassed. Rec Shares, pretty genius. Again, I think I'm more like, I love the 100 QQQ, right? And I kick myself because of not understanding technology and not understanding that semiconductors had gone to growth mode, not cyclical mode as much as they were, right? Like semiconductors are basically air. So, as a non-technical person, I was brought up like semiconductors are cyclical. And so I never really understood the actual change in, what semiconductors were going through. But, QQQ owns enough of Nvidia and AMD and Apple to like be a semiconductor, and Navigo, Broadcom. So it's like, man, like it ain't broken. I'm not going to try and fix it. And QQQ's just been my best idea forever. So,
Howard, I gotta say this hour has completely flown by, and we greatly appreciate your time. One thing that we like
just
to
felt
do,
like 5 hours. It felt like the longest podcast I've ever done.
well, I'm privileged I'm grateful and privileged
like
that
a
this is gonna be
treat.
the longest
This is
podcast.
like you guys are letting me ramble with good questions, but I took up the whole time.
Well, we like to end the show with one final thought. If we can give one thing for the week ahead for somebody, what would yours be today, Howard?
Well, I think like the one final thought is like embrace the compounding thought, right? Math, like as broken as as much as cheating's going on out there, math is math. If you deduct, drug prices can't go down 2,000%, but the stock prices can go up 2,000%. Like just there's fake math and there's real math, right? And the White House is spreading fake math. Real math is compounding. And anybody can figure it out. 15% over 20 years is phenomenal. And it starts looking, and you can get 16, get 20. It's a big difference. But I'm saying you can go get 10 pretty easily if you have like the right frame of mind and the coat, just staying in. So, I mean, that is still my thing, is compounding. Like I said, as I'm at the twilight of my career, no one grabbed me and just shook me and said, idiot, look at this chart of compounding.
GP, what do you have for us?
Couple things. Grateful, patience, and I think taking moments to learn from others' mistakes will greatly improve your process. Just so try to listen, right? And today's a great example. Howard dropping a lot of knowledge over his, did you say 50 years, Howard?
Yeah, I mean, I was getting hustled at 13 by brokers and stuff.
So since he's 10,
I mean, I've been a good investor since like the internet when it was easy.
So that's perfect, right? So you got a lot of knowledge from Howard today. I think you absorb it, right? I think that's probably the best thing to do. Yeah. Compounding, longevity, all that stuff is important. Ben, how about you?
Don't let fear shake you from your plan. If you got a plan and nothing's broken, don't let some red candles scare you. Just stay with the plan.
I think if you find the right people to help you stay with the plan, you don't have to do it yourself. So meaning, yes, red candles are a good thing if you have a plan. So I would say one step further, like my therapist will always say to me, but if you just added that, right, you're right, but you're not a trained professional, Howard. But if you just said that to your kids instead of saying like you were right, but then if you just added that little fucking twist, right? Like, and I'm like, I hate Pilates, but like it works. So it's like, you're absolutely right. You're going to get punched in the face. You're going to get, you can back test all you want, and then you're going to get 6 red candles. And a good plan and a good team around you, right? Whether you're an athlete, but especially as everybody can invest. And so is to appreciate those candles, because the other people are not prepared for those candles. So, I mean, it goes to my like VIX 60, buy VIX 60, sell VIX 10, right? And some variation in between. It's like, I get excited when there's 12 red candles or VIX 60. I'm like, because it's just not comfortable. And it just can't last, right? Something's going to break and you need to be on high alert. So every plan's going to see a VIX 60 thrown at it. It's then the quick extra decision you make then, which is just stay. and do the opposite, right? Like Costanza. VIX 10 is easy. Like do what you want, but like VIX 60 is hard. So just not only just try and plan for it, but like truly do the opposite, because that will save you years of compounding.
Yeah,
I couldn't have said it better, Howard. That was awesome. I want to thank you, Howard, for being here. Thanks for jumping on. You're welcome anytime, of course. But thanks for
that ugly sweatshirt. Do I have to wear that ugly sweatshirt?
No, we threw the uniform on just for you.
Why can't that sweatshirt say "I love Howie"? I have no pull at this company.
We'll get our people to do that.
I'm surprised you're not asking why we're wearing sweatshirts in summer either.
I'm in my mom's basement.
Where are you?
I'm in my mom's basement, so that's why I got a sweatshirt on.
Oh, you are? You retail prick. So where are you today?
I'm in Kentucky. I live here, and I'm really in my mom's basement. I moved home about 2 years ago, and from a successful marketing career, and joined. Came home to help my mom and dad and let them enjoy time with their grandkids. So we're fortunate enough to have a couple different houses, and they live next door, and we live in the house I grew up in. So when I say I'm in my mom's basement, I'm literally in my mom's basement.
I keep my in-laws in the attic. Is that a good thing or not?
Your in-laws maybe, but I've got a great relationship with my in-laws, so I'm not going to go that far.
They're always complaining about bats. I don't know if that's good. I go, bats are great. They're healthy. Look at China. What could go wrong?
So you're saying it started from your attic? Is that what I understand?
I call my in-laws Wuhan. That's their nickname.
Oh my. Well, that's it. That's the show. Thank you for watching the Community Rip. We'll check you out next week, Wednesday at 2 p.m. Thanks for watching.